We gonna make it. We gonna make it. Hey, what's up, people? It's your boy Trader Die here. Got the theme music going on. Always remember, we gonna make it. But yeah, people. So listen. Tonight we're doing a continuation of last night's lesson. Last night we talked about fundamental analysis. That was the introduction, and I cannot stress to you people enough. For all my long-term traders or short-term traders, fundamental analysis is very important. As I said multiple times, it's like a patient going to the doctor. The doctor's going to check the patient's blood pressure, take the temperature, check the pulse, check the heart rate, check the weight, things like that. Basically, when you're doing your fundamental analysis, that's what you're doing for a stock. You're checking all of that. So just to rehash, we went over fundamentals. When you check the fundamentals, you're checking it at the basic level, at the fundamental level. And this is called fundamental analysis. You know, so when you do the fundamental analysis, you're checking the financial health of the company. That's why I always use the doctor-patient analogy, because you're checking the health of the person, you're checking the health of the company. The thing with fundamental analysis, which is so important, is for growth stocks, value stocks. Like I told you before, a value stock is a stock that maybe the price is low right now, but they have strong fundamentals. So why is the price low? It could be right now in an economy like this, a lot of stock prices are falling down. But when you check the fundamentals of those stocks, you're like, whoa, this is a good stock. Why is the price down? That is a value stock. That is a stock that you should invest in. Like, I cannot emphasize that enough for my long-term investors. Now, for my day traders out there, guys like myself, fundamental analysis, it's not really that important because you're going to get overwhelming information that you really don't need. Day traders, we stick to price points, technical analysis. Now, but don't worry, people. That's coming up next. Technical analysis, but I have to get to the fundamental first. Break it down to the basics. Now, a word that people got confused yesterday before we get into tonight's lessons was liquidity. And liquidity, we tried to explain, was assets that's easily converted into cash, like stocks, bonds, commodities, futures. Whereas real estate is an asset, but it's a illiquid asset, which means it takes a long time to convert that sale into cash. Houses take forever to sell. That's why they're not considered liquid assets. They're considered illiquid assets. It's still an asset, but it takes a long time to sell. I think a lot of people got confused like that. You wouldn't believe how many emails and comments I got over that. So that's why I'm just rehashing that. So you can have assets, but there's two type of assets: liquid assets, illiquid assets. One's not better than the other. They're both assets, except one, a liquid asset, converts to cash fast. Like, you just, like stocks, you just call your broker and sell them. Like me, I just hit sell. I have the cash in my account. Whereas a liquid asset, it takes a little bit more time to get the asset, get the cash, people. All right, so on to tonight's lesson. Like I said previous times before, with the fundamental analysis, there is, well, see, there's 5 ratios, but I don't want to overwhelm you, so I'm gonna give you the 2 most important. All right. The first ratio is the earnings per share, known as the EPS. All right, so EPS, see, neither earnings nor the number of shares can tell you much about a company. If the company has so many shares in the earnings, that's very basic information. But when you combine them, voila, it's like you get a magic trick. Then you get one of the most commonly used ratios for company analysis. The EPS tells us how much of a company's profit is assigned to each share of stock. In other words, how much of the company's profit can be paid out to the shareholders if need be. So the EPS it is a ratio. Now, my math guys, I'm sorry, I gotta stop saying guys. My math people, guys and girls out there, know that a ratio is one number divided by another number. Let's not make it harder than what it is, people. It's a ratio. So the EPS is the net income divided by the total outstanding shares. So let me put my screen share on because I can't prepare tonight. I know about the screen share now. Home tab. Where am I at? It's the new. I'm gonna go right there. Yes, that's it. Right there. All right, people. You should see my screen now. I'm on the Market Watch. Now I have like a customized account here, but the accounts is really see a lot of these websites. They have accounts. They have the free accounts and the customized accounts. But the basic account, as you see right here, it gives you the EPS. But me personally, I like doing the work myself. So again, for the EPS ratio formula is net income divided by the total outstanding shares. So when you go here, I'm on my other site at wallstreetjournals.com. Let put the screenshot on that one. Okay, I don't know. Share that screen for you people. Now, if you see, oh, what just happened? Okay, yeah, if you see here, now the net income, like this is the balance sheet. Whoa, what's going on? And this is stuff that we went over yesterday. Like this is what you call the balance sheet or the financial statement. As we said before, the financial statement shows you the whole thing you need to know about the company, everything. These numbers here, we're going by the fiscal year. Now, I told you there's quarterly or there's annual. Quarterly it'll be four separate balance sheets, but we're doing annually. So what we need right here, net income. That's very important. As you see, the net income growth is 28%. Oh, I'm sorry. This company is NVAX. That's the company that just got that $400 million corona vaccination grant. So this is a company that I'm going to be watching. And you see right here, the earnings per share is 5. That is a pretty good number right here. EPS, earnings per share. Now, again, this is stuff is basic. I'm sorry, it's easily found if you just go to the company's balance sheet, company financial statement. I cannot emphasize that enough. But like I say, I like doing the formulas myself. So like here, get off the screen share. Oh, you can see me in the screen share. I didn't know that. I'm sorry. Sean Seaton. What does the negative under the EPS mean? That means that pretty much means that there is no. I don't want to scare you away because that means that the shares, there's not enough money to pay each share because sometimes it means that the company has too many shares out there. That's not a bad thing or a good thing. I don't want somebody to see that the numbers in the negative and get scared away because it could be like, how can I see this? Now the EPS is only one part of the financial statement. So don't let just because that has a negative number scare you away. That's because the NVAX stock is actually it's a negative 4.15. Yeah, it's actually negative 4.15. So that just means that they have 57 million shares, bro. And their net income was only 132,000. There's just too many shares, too many outstanding shares. Companies like these, they normally do stock splits. Actually, I'm gonna get to that in a. I'm gonna get into that on a other basis, like a reverse stock split or stock split. Basically, they just take the shares and they just half them. So instead of having 57 million, they'd be like, what's half of 57? 20, what? 28, well, 27 and a half, 28, whatever. It'd go down to that. Let's not get confused on that now. Let's work through what we're gonna work through. So yes, the formula for the earnings per share will be the net income divided by the total outstanding shares. Okay, people, remember the net income of a company, it's like your net paycheck. There's gross income, and what's the gross? How do you get from gross to net? The taxes, the operating expenses. Okay, so let's make this very simple. Like this, I always stress to people. Oh, let me take off the screen share because I'm looking. Yeah, I always stress to you guys that a lot of things on Wall Street is the wordplay. Like, just follow the words. The net income, the gross income. Let's follow the words. Total shares outstanding. But yeah, so that was the EPS. Earnings per share. Another thing is the price to earnings ratio, which is also known as the multiple. Now, the multiple you can calculate by dividing the company's current stock price by its earnings per share. Now, again, we're doing NVAS stock. All right. So we already, for the people out there who don't know, you can go to Google.com, or you can go to, just put NVAS stock. Like, I'm on my Ameritrade, but I'm gonna go to Google with everybody. Matter of fact, we can do it from right here from my Wall Street Journal page. It has the price and it has the earnings per share. Okay, so let me screen share again. Screen share. Okay, give me a second. We gonna make it, people. We gonna make it. Annual income statement. We want to share that page. All right. So as we see here, price of NVS stock is $38.30. So if you know that the multiple, the price earning, the PE ratio, which is known as the multiple, as I covered before, that price is found by dividing the current stock price by its earning per share. So 38.30 is the current stock price divided by negative 4.15. So divided by 5. That means Novex has a 9.22 multiple, or a negative 9 multiple. Now, I don't want to scare nobody off with that number, because when they see the negative 8, yes, son Eric, Ameritrade is love. I told everybody out there, just go to Ameritrade. I wouldn't even go to Robinhood and nothing else. That's like a waste of your time, because once you become good for anybody that's on Robinhood as a beginner, once you become good at trading, you're gonna see Robinhood is basic. You're gonna upgrade anyway, so you might as well go upgrade now. Yeah, but yeah. So we just calculated the PE ratio, the multiple, which is the negative 9.22. Now that number scares people all. Like, oh my God, that's the negative number. Now you want to look for companies that got positive, as always. But I said before, for this company, they have a lot of shares, man. 57 million shares. I will not be surprised in the upcoming months that they actually, like I said previously, stock split them shares or reverse split them shares to take some of the shares off the market. So the PE ratio and the EPS, earnings per share ratio, they will all go up. They will probably go from, not probably, they would go from negative to positive. So don't let the negative numbers throw you off, because doing these podcasts, my man Sean Seaton and Hershey Rodriguez, they actually put me on this coronavirus vaccination. And listen, I cannot stress this enough, people. Government funding, they are throwing money to biotech stocks. They're just giving it away. Like a $400 billion grant, $1 million grant, $500 million. They got more grants coming through the pipeline. What's up, y'all? There, I see you out there, baby. Yeah, so you always want to check the fundamental analysis. These two ratios, like I'll go over it again. The EPS is the earnings per share. That is an important ratio to know. And also the P/E, which is the price to earnings ratio, better known as the multiple. Yes, Sean, biotech is getting the bag. Now, there's a multitude of stocks out there. I'm sorry. There's a multitude of different ratios that are available for investors to use. See, but my opinion, see, I had 5 here. Well, you can't see it's a glare. I'd have 5, but I keep forgetting I'm teaching the class, so you people might not know what I know. So I'm going really slow here. So I'm sticking with 2. These 2 are some of the more important ones, as they give you the most information. When used in conjunction with other fundamental indicators, they give an investor a clear, concise picture of where to invest. These indicators are a great way to find value in the market. you'll be able to find if a stock is easily overvalued or undervalued. Now, I always talk about value stocks, undervalued. Well, there's also a thing called overvalued. If you do the fundamentals, a great example was Enron back in 2000. See, I wish I was trading back then. I was like 19 back then. I wasn't nothing. But Enron was a company that was severely overvalued. And now, me learning about stocks, and I'm looking back in hindsight, I'm like, didn't nobody check the fundamentals? Because when you check Enron fundamentals, that was a severely overvalued stock. They had terrible fundamentals, but that's such a high price on here. So that's another thing. And people, you can make money in a bear market. That's why you sell. Don't you ever think just because the market's going down, you can't make money. Oh no. You make money both ways, buying and selling. As we said before, though, it's called going long is buying, shorting is selling. See, but most people are beginning investors, so they don't understand the concept of going short on the short side. But believe me, there's plenty of money to be made. If you could make money going short selling stocks, they wouldn't allow you to short sell people. Like, please believe, if you can make money doing it, it will not be an option. All these options that they have, it's options because they make money from them. So, Sean, you say risk of lawsuits if something goes sideways with the vaccine. Not necessarily because, like, it's gonna be all kinds of testing for the vaccine. And I think these vaccines they're not going to be mandatory. They're going to be people are going to request them. And if I ask for a vaccine and I get messed up, my lawsuit goes out the window. There's no lawsuit because I asked for the vaccine. And we all know. I'm not trying to change the topic, but everyone knows when you get a vaccination, they shoot you with a dead or weakened version of the virus, like the flu shot. You get the actual flu bug. It's just a dead flu bug or a weakened flu bug. Your body learns to fight those. It produces antibodies to fight it. Next time it sees that, hey, I've seen you before. Now I can fight you. So this coronavirus vaccination, again, I'm no medical. I'm not a doctor or nothing. I'm just going off of like the AIDS vaccination. Every vaccination they shoot you with a dead Yadira. How do I create a stock for my own company? That's a completely different podcast. Hey, Yadi, email me at TRADEorDIE.LIFE@gmail.com and I will get back to you. Or if you want, we can do a podcast on that, but that's kind of a more of a completely topic. And I'm kind of stick to topic now. Yeah, I'll be all over the place. You already know me, Yadi. But yeah, so fundamental analysis, those two, the price earnings ratio and the EPS, the earnings per share, those are like very important. Those are like super important when you use your fundamental analysis because it's like if you don't know the fundamentals of a company, why should you invest in it? And I cannot stress that enough. I think I'm gonna stress that on every podcast I do. Check the company before you invest in it. I cannot tell you how many war stories I hear about people who saw the news. They got a hot stock tip from the news, or their friends say, "Hey, buy such and such stock." No, no, no. Do the fundamental analysis. So I hope watching these podcasts, you will learn how to do the fundamental analysis. At least, like I say, this is the bare bones. Any questions, I can go so much more in depth, but I'm not trying to go in depth because everyone learns that their speed is different. So again, I'm at TRADEorDIE.LIFE@gmail.com. Or you can hit me up on Facebook, TRADEorDIE.LIFE at Facebook, Twitter, TRADEorDIE.LIFE at Twitter, Periscope. You can hit me up because yes, I love to teach. But yes, back I see you, Jazzy. Yeah, that's what I do, Jazz. I try to teach. I try to teach. But yeah, so these ratios, now there's a couple more price to sales ratios, price to book ratios, but those are a little bit more complicated. And I don't want to give you too much to learn with. So I think these two ratios right here is what we're going to stick with. Again, the EPS, the earnings per share, and the P/E, which is also known as the multiple. Now, the higher the multiple, the better the company to invest in. So when we was comparing last night, I think that might be my lesson for tomorrow. Now I'm thinking out loud. When we compare those four companies for coronavirus vaccination, it was J&J, Johnson and Johnson. It was NVAX, Novex, Madera, MDY, and Sanofi, SAVI. Now going through those four companies, oh man, that's how you find a one to invest in. Looking for the earnings per share, looking for the multiple. You compare multiples, you compare the earnings per share. And that's how you find value, people. Always. It's all about value. It's not so much about, no, let me rephrase. It's all about making money. But it's all about making smart money, not dumb money. Like I can't emphasize enough. Johnson and Johnson, it's a good price, but it's $149. I would never find that. Whereas Novex is only $38. And they just got a $500 million grant, which is they got so much more room to grow, you know? So that being said, let's let me get my screen share on real quick, people. Give me a minute. Get my screen share on. Um, yeah. This always happens when I'm on my podcast. It gets silly. All right. Yes. Anyway, those four companies, man, those like coronavirus vaccination is very important. I cannot stress that enough. And so anyone out there is looking for a company to invest in, again, I'm no financial advisor. I am not your stockbroker. You need to take this information and call your financial advisor and ask them for more information. What I do is give you the framework. And like someone else brought this to me, I cannot emphasize this enough, man. With this coronavirus going on, biotech is gonna be it's money. They're throwing money. They're throwing money. Like shoot, the stock gapped up 40%. Exactly, James. Exactly. The markets can be extremely rewarding. I never stop. Me neither, brother. I've been trading now, what is it, 2020? About 11 and a half years now. And I still learn new stuff, bro. I learned, I cannot stress this enough. I am a day trader. Starting these podcasts, some guys came on my podcast talking about this coronavirus vaccination. And at first, I'm like, yo, that is long-term trading. That is not me. But doing my research, I see that it's profits to be made in this. I cannot stress this enough. That's one thing I think I'm gonna say every podcast. Biotech stocks, coronavirus vaccination. That is really on Wall Street. Like I cannot stress you. Like NVX or the stock. I mean, it wasn't a bad company, but prior to that, to them getting that grant for coronavirus, man, listen, their stock gapped up 40% overnight. That is a lot. That's a big gap. As I spoke to you before, stocks. I'm sorry. The stock market from 9 to 4:30. So from 9 a.m. to 4:30 p.m. The charts track every move that the price makes. At 4:30, the chart stops tracking. So any price movements after that, they're gonna leave gaps on the chart. So imagine this gapped up 40%. That was a big gap. I cannot stress that enough. As a day trader, oh my God, I would have jumped on this. Yes, I was gonna get on that too. Corey and Sean. Yeah, see, Corey, airlines are good best now. Nah, because Warren Buffett dropped him from his Berkshire Hathaway portfolio, and that just killed them. See, that's one thing about the market. You're gonna learn. You're gonna learn about the market. You sell the rumor, buy the fact. I'm gonna say that again. Sell the rumor. Like that's what happened. Warren Buffett dropped the airlines from his portfolio. Their stuff just crashed. All airline stocks are down now. Why? Because Warren Buffett, is Warren Buffett. So you always sell the rumor, buy the fact. So everyone out there always asking me what stocks to look for. That's why I did this fundamental analysis podcast. I cannot stress this enough, people. Go to the income statements. We can do this again. I cannot stress this enough. Let me screen share. Now I'm gonna do it real simple. I don't feel like logging in my Ameritrade and all that. So let me do my screen. Well, let me find it for you first. No, I can do it and find it. Right to Google. So just go to NVA. This is the easy way, okay? NVAX. You go to balance sheet or financial statement. NVA's financial statements. Like, that's for any stock that you want to track for. And go, Yahoo, first thing, and look at all these different tabs. So we're gonna take the first one. I say I'm gonna keep it simple. Now when you look here, this is I cannot emphasize this enough, people. This is the meat of financial fundamental analysis. This is the meat. Like this right here. Now, I don't want to give you too much. Like I said before, if you check last night podcast, I went over what is the important numbers. But we can do a little total revenue, EPS. You want to go for your operating income, you know, total expenses. Basically, you want to make sure the company got more assets and liabilities. That's just more pluses than minuses. That's what it breaks down to, bare bones. More pluses than minuses. I can't make it any more clear than that, people. That's what you want. More pluses than minuses. Let me go ahead and close it out. Hey, more pluses than minuses. I cannot beat that into people's head enough. When you go over the financials, pretty much assets should outnumber liabilities. Now, in certain cases, they can have more liabilities. They're receiving government funding while they're doing a downturn right now. But the simple fact is, before the coronavirus, they wasn't receiving government funding. And on top of that, even though they're receiving government funding, the stock it went up 900% since the year started. Okay, that's why it's downtrending, Sean. It went up almost 1,000% since the year started. Like I said in my very first podcast, it doesn't matter if you got Brent Favre arm throwing a boomerang. You can throw the boomerang from here where I'm at in Harrisburg, Pennsylvania, all the way to Australia. At some point, it's gonna come back. It doesn't matter, and that's what the stock's doing. That's what you call a retracement. What you're seeing, a downtrend. Oh, but don't worry, it's not gonna retrace that far. It's gonna go. You got the funding. Wall Street everyone is like they're waiting. This is I cannot stress this enough. So anybody out there emailing me about you want a hot stock tip? NVAX. Okay, now do the fundamentals. We can do it. If you need help, email me, TRADEorDIE.LIFE at Gmail. We can do it together. I have no problem helping people. That's what I like to help. So I remember when I first started trading, there was nothing like this. I was just me. There was no videos, no magazines. It was just me and my money taking loss after loss after loss. I tell people, honestly, the best way to learn trading is to trade. Once you start losing money, you're going to see what works and what don't work. And you're going to stop doing what don't work. You're going to start doing what does work. So, the government, hold on, Corey, the government bet so much on them, plus you're going to have a pent up demand. Facts of the corona. Facts. On top of that, the supply. See, this corona, that's what people don't understand. It's not over. It's not going to be over for a while. So, even though NVAX, they might be the front runner right now, it could be a company, it could be Harold's Drug Company. I could make just work with me, people. That's an example. Harold's Drug Company could get funded. Next week, I can get $1 billion. So it's gonna be all type of companies fighting for this government funding. I will always suggest people. You want to know about Google coronavirus vaccination. It's gonna tell you who are the top runners for that. Once you get those companies, you do your fundamental analysis. Okay. Then I gave it to you. I'm gonna give it to you again. But not the most important ratios, but in my opinion, how I trade. Well, I don't even use ratios, but anyway, for a beginner, the earnings per share and the price earning ratio, the price earning multiple. Those are two easy ratios for a beginning trader to put in his toolbox and throw them out. And you can sound smart when you talk to people. Like, yeah, man, I did the earnings per share. Oh yeah, oh yeah, man. Like you sound real smart too when you talk to people. You can put them in your little toolbox. So when you want to check a company out, what about your tools, people? And that's what I'm trying to do, man. Each podcast, I want to give you your own tools so you can make your own toolbox. So when you look for a stock, you can pull out your tools. Maybe like me, I use the earnings per share and the price earning. You can use the price to sales, the price to book, the projected growth. There's so many ratios to use. So I didn't want to confuse you. I just gave you what I feel like the two easiest. And also, them two are they're very informative. Also, I can't stress this enough, people. In my next coming podcast, I'm going to move to technical analysis. Technical analysis mixed with fundamental analysis. You become a bad trader. Because a lot of people don't realize, man, trading for real, it's a 50-50 proposition. You either buy or sell. I mean, honestly, let's not make it harder than what it is. It's either buy or sell. There's two options. Therefore, it's a 50% chance of success. So the odds state, honestly, that I could blindfold myself and hit buy, sell, buy, sell, buy, sell, buy, sell for 100 stocks. And I'm going to be like halfway right. That's just the odds. It's a 50% chance, people. You know? No, Sean, call or put, that's options. We're gonna get into that too, but call or put is something completely different. That's not. I'm not gonna teach you. That's what. Listen, I've been trading for 12 years and I barely do options. I use options for one purpose. Well, one purpose. And I'm gonna get into that in the coming podcast. But yeah, call or puts are for options, not stocks. But anyway, back up. A call or a put is pretty much a buy or a sell, but it's for an option. Yeah, so people, you either buying or you're selling. It's a 50% proposition. So let's not make Wall Street harder than what it is, man. Like that's what I'm trying to do. I'm trying to make it so simple where you can say a 4-year-old can do it. You know, like no, what was a Geico commercial? Trade or die makes trading so simple. A caveman can do it, and that's where I come in at people. Let's make it simple. Let's keep this up real simple. You either buy yourself. 50% proposition. So with these indicators and these technical analysis of fundamental analysis, you're increasing your odds from 50% to maybe 60% to maybe 70%. Because you always want to increase your odds. That's the main point in trading. Before you make the trade, you want to make sure you have the highest possible odds so you're successful in that trade. But again, I cannot stress this enough. It's 50-50 at the end of the day. So let's not think that I'm a genius or Warren Buffett's a genius. It's 50-50. It's the odds, people. You either buying or you're selling. You're either selling or you're buying. That's all you're really doing. But with using these analysis that I'm trying to teach you guys, the fundamental analysis, you're going to increase your odds from 50% maybe to 60%, maybe to 70%. Because again, there's no such thing as a 100% bet. That's not that's not good. So remember, people, and that's the motto, man. Do not let this downturn in the market get people down, man. You know how many people I talk to and the market's down, they be so down and depressed. The market comes back, people. It's not gonna completely collapse. It's not, no, that's our economy. Contrary to what people think, the American economy is the strongest economy in the world. Okay. And it's the strongest by far. That Chinese economy can't even compare to our economy. If they only knew, see, I follow stuff like that. So our economy's good, bro. China don't got nothing on America for real. I hate when people say that. Their economy, nah. See what it is? The Chinese, they were so poor. Now they're getting a middle class. That's why people's making a big deal. But they have a lot to catch before they come to us. So people, we're gonna make this. We're gonna get through this. TRADEorDIE.LIFE. I got you. Come see me at TRADEorDIE.LIFE at Gmail. TRADEorDIE.LIFE at YouTube. Here on Facebook, TRADEorDIE.LIFE, baby. TRADEorDIE.LIFE, where we eat, sleep, drink, breathe, trading. It's not a life. Trading is not a hobby. It's a lifestyle. That's why it's called Trade or Die. All right, people. So tomorrow we're gonna do something different. I want to talk about banks and bank accounts, financial literacy. I think people need to know the difference between savings accounts, checkings account, money market account, and those different bank accounts. Because a lot of people get confused when they do that. A lot of people don't even understand what they're putting their money in, a CD or what have you. So tomorrow we're gonna take a pause on the trading. We're gonna do some financial literacy to talk about what bank accounts a person should open or what have you, or the difference between the bank accounts. All right, people. It's your boy Trader Die. See you tonight. I'm sorry, tomorrow night at 8 o'clock. 8 o'clock. That's a hot date. All right, people. Trader Die. Remember, man, we gonna make it. We gonna get through this.